what exactly is happening in the real estate market here in the Lower Mainland. If you try to keep up with the real estate market whatsoever, you're definitely going to be seeing the negative headlines in the news all over the place. As you probably already know, both the number of sales and sales prices are both down in the past couple of months. But what exactly do those numbers look like? In this video, I'm going to break down all the real estate stats for you here in the Fraser Valley for July of 2022. And for those of you that don't know, that is essentially everything on the southeast side of the Fraser River for the most part, all the way out to Abbotsford and including Mission. I'll cover everything from the number of sales, listings, type of market we're in, and of course, prices. And I'll also be giving you a little bit of insight on how the trends here have changed and what sorts of opportunities there may be out there for you. So if that sounds like something you're interested in, stay tuned because it's coming at you right after this. What's going on, guys? Alex Dunbar here from the Dunbar Real Estate Group and RE/MAX Treeline Realty based out of the Surrey, Langley areas. And in this video, I'm going to break down the most recent real estate statistics here in the Fraser Valley. And with inflation running rampant, although the majority of us really don't like this, I'm going to ask that you can inflate one more thing for me, and that's the like button. And that's so that I can get this information out to more individuals just like yourself who want to learn more about real estate here in the Fraser Valley. And if you are interested in seeing more videos just like this one, as well as community tours across the Lower Mainland, I suggest you subscribe to my channel and hit the bell so you're notified whenever I put out a new video. But diving right into it, both sales and prices have been on a decline for the last couple of months. And we've seen a heavy shift in the market from a seller's market to more of a balanced and even in some cases a buyer's market. So I want to show you exactly what those numbers look like by sharing my screen with you, so here we go. So to start it off, I want to look at the number of sales in the Fraser Valley Real Estate Board. So first of all, looking at all property types, you can see we only had 946 last month, which is down 50.4% from July of the previous year. Now, if we take a look at what the peak number of sales looked like, that was in March of 2021 at over 3,100. Now, this is actually currently the lowest since May of 2020, which we have to go all the way back here. And of course, you know when this was essentially the second month of COVID before we actually saw things take off again. Now, looking at the individual housing types, detached is at 297, apartments 356, townhomes at 234, so down 61.1, almost 36%, and 51% in the total number of sales. Now, the next thing that we actually have to look at is what are the active number of listings. So what we can actually see here is that the active number of listings are on a bit of a decline. Now, typically when we see a decrease in the number of sales, we see an increase in the levels of inventory. At this point in time, it's actually been on a bit of a plateau, and now it's actually declining. So in regards to pricing, typically we need to see an increasing level of inventory in order for prices to fall. So because of this, we could potentially expect prices to hold up a little bit better than they have in the past couple of months. But again, looking here, the total number of active listings is at just under 5,900 as of the end of July. And this is up 23.4% from last year. Now we look at what it looked like over the past 10 years. You can see it's more or less in line with the average per se. Now, looking at detached homes, apartments, and townhomes, detached is up 20.5%, townhomes almost 68%, but apartments only 4%. Now, because of this, I think you're gonna notice how these correlate with the actual prices when we get there. Now, the next thing we want to take a look at is the sales to active listings ratio. So this gives us a good idea of what sort of a market we're in. It's a good tool to take a look into that. And so in general, when we're between 20 and 14%, this is what we consider a balanced market. Over 20% is a seller's market, and under 14% is a buyer's market. So currently we can see that detached homes are actually in a buyer's market, down almost 68% from the same time last year. Apartments, however, are up here at almost 28%, so still in a seller's market. And again, keep this in mind when we go to look at prices. Townhomes have finally moved into a balanced market at 18.1%. So again, detached is gonna see, or we'd expect it to see, the biggest decrease in prices based on some of these metrics. But is that true or not? Well, let's take a look. So we're using the average prices here because the MLS HPI price is a lagging indicator. It is typically considered to be a better indication of where prices are. However, only in a longer term format because it looks at the average type of property in a given market, which of course can be skewed in one way or the other if there are too many number of low sales or high-end luxury sales. But for the time being, it's definitely average sales price that we want to be looking at. So as we can see, in comparison to last year, detached homes are still up 9.5%, apartments up 20%, townhomes up 15%, and all property types in general are only up 3.5% in comparison to last year. However, if we look at this in comparison to peak prices, detached homes are down from about 1.9 million to just under 1.5 million. This is a decrease of 21.2%. That is a massive decrease. In regards to townhomes, we can see here that they were just under a million at 988,000, now down to 846,000, a decrease of 14.3% in prices. Moving on to condos, remember, as I mentioned, condos are the ones that are actually holding their values the best. So we can see that from the peak, they were up at 609,000. Now they're down to 556,000, only a decrease of 8.7%, so significantly less in both detached and townhomes. So what exactly does this mean for you? Well, this can present a fantastic opportunity to upsize, especially if you're going from a condo to a townhome. Of course, the same goes for a townhome to a detached home. However, prices have slipped back a little bit more, and of course there is a bit of a larger jump, but what we've seen is the market has compressed. So it started, the top end has come down significantly further than the bottom end, and even if they were all to come down an equal amount in relative percentage wise, this would still close off that gap, but it's been even more exaggerated. Just a couple more things that I wanted to point out is that the days on market have all gone up for all property types. For detached homes, it's at 24 days. For townhomes, it's at 19. And for condos, it's at 21. This means properties are sitting on the market longer, taking longer to sell, and giving buyers more opportunities, and allowing them to be a lot less rushed. In general, what we've seen in terms of trends and location is that the closer you are to Vancouver, the less of an impact these decreases have had, and the further out you get into the valley, such as places specifically like Chilliwack, Abbotsford, Maple Ridge, and Mission, we've seen the greatest decreases. However, do keep in mind that that's also where we saw the relative greatest increases as well. So when you look at it that way, it only makes sense that the places that we saw the greatest and quickest increases are also having the greatest and quickest decreases. And I do expect this to continue for the next couple of months. However, as I already mentioned in regards to property types, detached homes have seen the greatest decreases, then townhomes, and then condos. And this trend keeps itself up as you move into the valley as well. So the further out we go, and being detached properties are going to be the ones that have seen the greatest decreases. Now, why exactly is this? Well, there's been a couple of factors that have taken effect. Number one being the increased levels of inventory, so obviously this means there's less competition for buyers and more for them to choose from. And with extended higher levels of inventory, this is typically one of the factors that helps to see decline in prices. Next, and maybe the biggest factor, is the increase in interest rates, especially the last one by the Bank of Canada that did a full 1%. Just to give you some context, that's actually decreased the buying power of most buyers by around 10 to 12%. So the debate right now is whether or not we've actually seen the full impact of that as it's already baked into the market, or if we're still going to see that down the road. Because of the fact that we were warned that we were likely to see at least a 0.75% interest rate increase, many people think that it's already being taken into consideration and has already built into the current market prices. However, there's others that think it's still going to take 3, 6, 9 months in order to see the results of this. And what is my opinion on this? Well, I think it's probably a bit of both. There's definitely going to be those individuals who are trying to buy at the top of their budgets and now can no longer afford what they were looking for, but there's also several who were never looking at the top of their budgets, and this has only increased what they have to choose from. And if you're one of those individuals, I think now is a great time for you to find some opportunities, because everyone else that was looking at the same properties as you were are now bumped down a tier. And so either you're going to be able to look at better properties than you were before for for a lower price, or you're going to be able to pay less for the properties you're already looking at. But you're also going to have greater buying power than those other individuals. Additionally, what I've been seeing is that those turnkey properties, the ones with the wow factor, are the ones that are selling. And those that are more cookie cutter, don't stand out, and need a lot of work are the ones that are sitting on the market. And if you're a property that doesn't stand out amongst the rest, you have to do so in another way. And that's going to be through pricing. So if there's several properties, all with similar characteristics, and yours isn't the best price one, you're not gonna stand out or sell, and you're just gonna sit on the market. Now, my suggestion to you is if you do have one of these properties that doesn't stand out among the rest, you're gonna have to price it appropriately right from the start. And you really need to be aggressive right now. However, as a buyer, these are the properties that you can get great deals on, especially in a market such as this where people aren't getting very much action or interest. If you're able to overlook little cosmetic things and just take into account the more important things, such as the location and the layout of the property, this is where you're going to find the best deals. So what you really have to do is try to remove the emotional aspect as much as possible from the buying process and just take an objective view when you're buying. Because if you can get over the fact that there's some dings and scratches on the wall and you need to replace the flooring, and you realize that you can save about $25,000 and then replace all of it for about $5,000, this is how you're going to win in a market like this. So where exactly do I see things going in the next couple of months here? Well, I believe the majority of the damage has already been done. However, I do think we are still going to have a little bit more pain. And a big portion of what this depends on is what the Bank of Canada does at their next meeting in September. By the sounds of it, they're likely to increase the interest rate by another 0.5 or 0.75%. Now, personally, I think this will be their last, if not their second last hike. And what I think they're doing is just ripping off the band-aid because they've realized they've made mistakes in the past and they should have started to increase these interest rates sooner and slower. And because of that, they just want to get it over with and they don't want to prolong the pain. So by doing so, it's going to cause us some pain in the short run. However, I think that means we're actually going to see rates come back down sooner than some people may think. When exactly that is difficult to say, but I would like to think that sometime in the next year. But unfortunately, I don't have a crystal ball, so we'll just have to see. But I'd love to hear what your thoughts are, so leave me a comment down below. What do you think is going to happen? Are prices going to continue to decrease? Are we nearing the bottom? What's happening with inflation? And anything else that you think. Any questions or concerns you have, put them down there below and I'd be happy to get back to you. And with that, I'm going to conclude today's video, but if you did get any sort of value from this, all I ask is that you hit that thumbs up button. And if you are interested in seeing more videos just like this one, I suggest you subscribe to my channel and hit the bell so you're notified whenever I come out with a new video. And lastly, if you are looking to buy or sell in Surrey, Langley, or any of the surrounding cities and you want to book a consultation with me, you can scroll down and hit the first link in the description to book a call with me at your earliest convenience. Thanks so much for watching, and we'll see you in the next video.